To the part 2 lecture of our unit number 9 of PPB, and we will continue our discussion from where we have left in the last session. Let's start with the issue of international credit card. So traveling to or from India, here is a quick guide to international credit card for NRI and how foreign visitor can open rupee account. So first of all, authorized dealer bank in India can give international credit card to NRI and person of India origin. That means NRI can hold a credit card tied to an Indian bank even when living abroad. Right. Now the question is how the bill is paid. So the card bill is paid when you use that ICC. What is ICC? ICC stands for International Credit Card. So we are talking about how the bill is paid. So when you use that ICC, the bank settles the bill in one of the two way. What are the two way? Either it can be settled by inward remittance. Inward remittance means money sent from your foreign bank to India specifically to pay the card bill. Like you or someone abroad wires money to the Indian bank to clear the credit card charge. And the second way is from your NRI account. Right. Second way is from the card holder FCNR, NRE or NRO account. This is the second way. So the bank simply debit one of your existing NRI account to pay the card bill. So these are the two ways to settle the card bill. Either money sent from your foreign bank to India is specifically to pay the card bill, and the bank is simply debit one of your existing NRI account to pay the card bill. Like suppose if you already have an NRE, NRO, FC, NRB with that bank, they can take the card payment from those balance. Let me give you one example to make it more clear. Take the case of ASA. ASA sees an NRI. Okay. Say user ICC in Mumbai. Okay. So the bank either debit her NRE account in India to pay the merchant, or ASA arrange a remittance from her overseas account to settle the card bill. So these two things can be possible. Now let's talk about account in India of the foreign national visiting India. Let's talk about it. So that foreign nation that is non-India origin, right, who visit India may open rupee NRO saving or current account. They may open rupee NRO, NRO saving or NRO current account, right? You can see these two words. They may open NRO saving or NRO current account, right? So basically this is about the foreign national, right, who visit India. They may open NRO saving or NRO current account for short stay. So these accounts are meant to handle money they bring or they remit from abroad. Now the first question is how they fund the account. Yes, let's answer this question. How they fund the account. So they can put money in two way. Either they can put money in by the way of inward remittance. So the first way of putting the money is inward remittance. Right. So you can see now clearly written fund remitted from outside India. That's called inward remittance, which means money sent from their bank abroad into Indian account through normal banking channel. Right. Or the second way by the sale of foreign exchange that they bought into India. Right. So what it means? So whenever I say the sale of foreign exchange that they bought into India, it means they bring foreign currency note, sell them to the bank in India and deposit the proceed. First one, we are talking about how they fund the account, either two way. One is the inward remittance, right, and second is the sale of the foreign exchange they bought to the India, like they bring foreign currency notes, they sell them to the bank in India, bank convert to rupee and then deposit the proceed. Let me give you one example to make it more clear. Take the case of John, right? Take the case of John to understand this more clearly. So basically this person John, he is from UK, he visited India, right? He sell $500 cash at a bank here and credit the rupee amount to his NRO saving account, right? So that is how it is done. Now the next point we have when the foreign visitor can take the money out. Yes. So basically if the NRO account is held for more than 6 months, right? So this is a key point. So if the NRO account is hold for more than 6 months, the visitor may have the balance paid to them when they leave India, right? The visitor may have the balance paid to them when they leave India. This make it handy for short trip. Suppose in the simple way we can say that if you open the account while visiting, suppose you open the account while visiting you open the account, right, and leave within 6 months. So within 6 months you left. So you can withdraw your rupee balance when you depart. So your rupee balance you can withdraw when you depart. Right, that is the point. So again I am repeating that if the NRO account is held for not more than 6 months, the visitor may have the balance paid to them when they leave India. So if you open the account is hold for not more than 6 months, not means less than 6 months, right? So they may have the balance paid to them when they leave India. So the account cannot be credited with the local, no credit of any local fund, which means account cannot be credited with a local Indian fund like salary or rupee receipt from the local activity, except the bank can credit interest that the account earned, except interest accrued thereon. See, what I am telling you, that no credit of any local fund except interest accrued thereon, right? So the account cannot be credited with local Indian fund, right, like salary or rupee receipt, except the bank can credit the credit interest that the account earned. So basically, short-term visitor account are for foreign fund bought in or remitted, not for local Indian income. Like you can deposit money you bought or wired from abroad. You cannot deposit money earned locally in India except interest. Okay. So the money that you locally earn in India, you cannot deposit except interest. Now let me give you one quick example to make it more clear. So basically take the case of Maria, right? Maria deposited foreign cash into what Maria did in, she deposited foreign cash into an RO saving account. She deposited foreign cash into an RO saving account. When she leave within 3 months, right? When she leave within 3 weeks, she can close the account. She can close the account and take the rupee balance with her. Right. So this is the case of tourist. She deposited foreign cash into an RO saving account. Okay. When she leave within 3 weeks, okay. So she can close the account and take the rupee balance with her. Next point. Ravi, he is an NRI. Take the case of Ravi. Ravi is an NRI. He used ICC in Delhi. International debit card in Delhi. International credit card in Delhi. So his credit card bill is debited from an NRE account in India. Right. And no extra wiring is needed. So that is the short plain English guide. ED Bank can issue a ICC and settle bill via inward remittance or your NRI account, and an RO account funded by the foreign remittance or foreign currency that they bring, and they can withdraw if they leave within 6 months, but they can't put local India earning into that account. I hope that is clear. So what we have just discussed, let me just summarize. We talked about ICC. So card charges can be paid by inward remittance or debited from the cardholder FCNR, NRE, NRO account. Then we talked about the visitor NRO account. I told you that foreign nation visiting India, they may open an NRO current or saving account funded by inward remittance or by sale of foreign exchange that they bought into India. So there are two ways of funding it, either from inward remittance or by sale of foreign exchange that they bought into India. Then I told you visitor NRO account. So foreign nation visiting India, they may open an NRO saving or current account funded by inward remittance or by sale of the foreign exchange that they bought into India. And there is a 6-month rule. What is the 6-month rule? The 6-month rule says that if the NRO account is held for less than equal to 6 months, the visitor may have the balance paid to them while leaving India. Suppose the NRO account is held for less than equal to 6 months, visitor may have the balance paid to them while they leave the India. No local credit, which means visitor NRO account cannot be credited with local Indian fund like wages. Interest only is allowed as local credit. So 6-month rule says that NRO account is held for less than 6 months. The visitor may have the balance paid to them while leaving India. And local credit I told you, which means that visitor NRO account cannot be credited with local Indian fund. Interest only is allowed. Like suppose I tell you that suppose a tourist, he deposited his deposit converted forex, withdraw on departure, and I use ICC, right? So I hope it is clear till now. Now let's talk about the account of foreign nation leaving India. So leaving India after working here, don't worry. There is a simple process to collect and send your pending rupee done home. Now friends, basically let's talk about basically a word you will see here. Let me highlight it. So the word is redesignated as NRO account. So what is the meaning of this term redesignated as NRO account? Think about it. So suppose there is a foreign nation. If a foreign nation was a resident in India, suppose a foreign nation was there, he was a resident in India and he has a regular rupee account. Okay, he was initially a resident in India and he has a regular rupee account. On leaving India, those resident account can be redesignated or means converted into an RO account. Right. So that is the point. So earlier his rupee account, he was having the rupee account, and after he leave India, right, that rupee account will be converted to an RO account. I hope it is clear. Now, the second point is when the bank must check bona fide dues. Here the key point is bona fide dues. What does it mean? See, the bank that is authorized category 1 bank, they must make sure that amount credited into this redesignated account are bona fide dues. Means that whatever amount has been credited into this redesignated account, that is NRO account, that amount is bona fide due. That is the money that was legitimately payable to the person while they were a resident. So when I say bona fide due, what does it mean? It simply means money that was legitimately payable. Money that was legitimately payable, right, to the person while they were resident, like salary, pending bill, or refund. The bank will ask for document and proof before allowing repatriation, right? Bank will say that please provide me document. Bank will say provide me proof before allowing the repatriation. Repatriation means sending back the money, right? Now, how repatriation work? Simple step. Let's look at it. Once the bank is satisfied that the credits are genuine, it allow the fund to be repatriated abroad. Yes, that means bank allow the fund to be repatriated abroad immediately, but only after paying the applicable tax. Right? After paying the applicable income tax, like income tax, TDS, etc., and other dues are paid. In short, pay tax first, and then the bank can arrange sending money overseas. That is how the repatriation work. Now there is a limit. The limit is US dollar 1 million. See, the amount repatriated out of such NRO redesignated account must not exceed $1 million in a financial year. So that is the point. So the amount that is repatriated should not exceed the $1 million per financial year. That means if you need to send more than that, the bank will ask you to get prior permission from the RBI, which is usually granted only in exceptional case. Okay. So the amount repatriated abroad should not exceed $1 million per financial year. Now the next point is when the money can go, where the money can go, right? So any debit from the redesignated NRO account for repatriation must be only to the account holder bank abroad. It must be repatriated to the account holder account maintained abroad. So it means the bank will not send the money to third party abroad from this redesignated account. In other words, the money go back to your overseas account. Then we have closing the account. Once all the pending dues have been collected and repatriated, the bank will ask you to close the account soon after. It is a temporary step to help you collect what is owed and move the fund home. Let me give you a short practical example to make it more clear. So friends, take the case of Sarah. So basically this person Sarah, she work in India and she has a resident saving account. She had a resident saving account. On getting a job abroad, she got a job abroad, she left India. On getting a job abroad, she left India. So her bank redesignate her resident account to an NRO account so that unpaid salary and a vendor refund can be collected. The bank asks for payslip and refund notice, deduct taxes, and then remit the cleared amount to the Sarah Bank in London, not more than $1 million that financial year, and finally closes the account once everything is done. So that is the quick plain English guide. Resident account can be redesignated as NRO to collect pending dues. AD category 1 bank verifies the dues. Taxes must be paid before repatriation. The $1 million yearly cap apply, and money goes only to your overseas account. So what I told you, redesignation means resident account can be converted to NRO account to collect the pending bona fide dues. Then bank check, AD1 category bank must satisfy itself that the credit are bona fide dues, means proof are required. Then I told you that you should pay the tax first, which means funds are repatriated only after applicable Indian tax and dues are paid. $1 million cap is there, right? 1 million per financial year. Then I told you that destination debit for repatriation goes only to the account holder overseas account, and finally the account should be closed after dues are collected. Now friends, some nationality face extra paperwork while opening bank account in India. So I will explain who need RBI permission, who can open an NRO account, the special rule for minority from Bangladesh and Pakistan, and the 6-month renewal rule. Let's understand. So, basically, if a person or company is of Pakistan nationality or ownership, or if an entity is of Bangladesh ownership. So, two words I am telling you, either of Pakistan nationality ownership or Bangladesh nationality, right? In both the cases, the bank must get prior approval from the Reserve Bank of India. So you can see approval of RBI is required, right, before opening the account. So this is about the Pakistan, right? Pakistan nationality or ownership. What about Bangladesh nationality? A person who is a Bangladeshi national can open an NRO account. Yes, he can open an NRO account. Okay, but only if they hold a valid visa, subject to valid visa and valid residential permit, right? Issued by the proper foreigner registration office, that is called FRO. It should be issued by an FRO. The bank will ask to see those documents before opening the account. Now, then we have some special rule for minority from Bangladesh or Pakistan. So, citizen of Bangladesh or Pakistan belonging to minority community. So, there is a limited special provision for minority community from Bangladesh or Pakistan who are living in India, right? And either they are already have a long-term visa. You can see they have been granted a long-term visa, right? Or they have applied for LTV and their application is under consideration, right? So the rule is that banks are allowed to open only one NRO account for such person. So they are allowed to open only one NRO account. You can see clearly written for such person, right? Subject to the condition that account is temporary until the LTV is granted, until the long-term visa is granted. So they are allowed to open only one NRO account for such person. Condition is that they have applied for long-term visa, right? Or they have their application is under consideration. Bank are allowed to open only one NRO account for such person, and if the person later become Indian citizen, the account is converted to resident account, right? Once they become the citizen of India. Now timing. So there is a 6-month rule, 6-month opening and renewal. Let's understand this meaning. So if the person has applied for long-term visa and it is still being decided, the bank may open the NRO account for 6 months only, right? That 6-month period may be renewed every 6 months while the LTV application is under consideration, right? So but each renewal requires the person to still hold a visa card, valid visa, and FRO residential permit, right? So he must have FRO residential permit. Right. So basically open for 6 months, renewal after every 6 months while LTV is pending. And bank don't keep this quiet, right? The authorized bank must report the detail of such account to the Ministry of Home Affairs. So this account must be reported to the MHA every quarter. That report includes name, passport, arrival date, visa, LTV, reference, and the FRO name and branch detail, so that the Home Ministry can track this special detail. So let me give you some example to clear these cases which we have discussed just now. So friends, for example, suppose Mr. X. Mr. X is a Pakistani owned company, right? They wanting to open an account in India. So bank cannot open it without RBI green light. So RBI green light has to be taken. Take Mr. Y. Mr. Y is a Bangladeshi student. Okay. So with a valid visa, he is having valid visa and FRO residential limit. Has to have FRO residential permit. So she can open an NRO for her foreign fund after the bank check her document. Now Mr. Z. Mr. Z is an Hindu from Bangladesh. He is an Hindu from Bangladesh. He applied for LTV, right? And is waiting. The bank can open one NRO for him for 6 months and renew it while the LTV is pending. Long-term visa is pending. And the bank will report the opening to the MHA. So what I have told you, for Pakistani national or Pakistani owned entities both, entities or individual both, right? So prior RBI approval is required. Second point, entities of Bangladeshi ownership, prior RBI approval is required. Then I told you Bangladeshi national. See, entities is different and individual is different. Suppose he is an individual. So see, entity means was company. For prior RBI approval is required. For individual, right? They are allowed to open an NRO account only with valid visa and FRO residential permit. Then we talk about the minority community. I told you that Hindu, Sikh, Buddhist, Jain, Parsis, Christian from Bangladesh or Pakistan with the proper LTV granted, right? So only one NRO can be opened and convert to resident account on Indian citizenship. Then I told you about temporary rule for pending LTV. So for pending LTV, account can be opened for 6 months only and it should be renewable after every 6 months while LTV is pending. So I hope this answers your question. Now let's talk about the SNRR account, which is called a special non-resident rupee account. So friends, do business with India but live abroad. So meet the SNRR account, a rupee bank account made just for foreign firm and people who are for a special non-resident rupee account. So basically, who can open it? Any person or any company. See, two things are there: entities or person. Both means the same. So any foreign nation or entity. So any person or a company resident outside India that has business interest in India, right? For example, an exporter, an importer, an investor, or someone providing services to India, they can open an SNRR account. For example, if your business earn or spend rupee because of India, right, you can get this account. Now, why use an SNRR account? Right, why? Okay, what is the purpose of it? Let's understand. So this account exists only for bona fide rupee business transaction. Right. So what does it mean? That means real commercial activities. What are the real commercial activity? Real commercial activity includes investment in India, import of goods and services, receiving payment for export, trade credit, and external commercial borrowing transaction, and business done by the IFSC unit. Full form is International Financial Service Center unit, right, at the gift city. So if you are transacting in rupee for real business reason, use SNRR, not for casual money transfer. Because in the definition, you in the basically full form you will see rupee account. So it is denominated in rupee, clearly written. Right. Now the question is where the account is kept. Right. So the SNRR account must be with the bank in India. Must be with the bank in India, not inside the International Financial Service Center. It should be outside IFSC. How long it can remain open? So the account can run for as long as the contract or business exists. So the account can run as long as the tenure of the contract or the business of the account holder exists. Right. So except for a specific activity listed earlier where rule may differ. Right. And if you suppose, for example, if your Indian business lasts 3 years, so the SNRR account can run through that time. Right. That is the point. It won't normally be permanent account beyond 7 years. So maximum it can run for 7 years. So if your Indian business lasts 3 years, SNRR account can run through that time. Now let's look at the business-wide segregation. So what is the meaning of this business-wide segregation? Let's understand. So bank will level the account for the specific business purpose, right? So bank will level the account for a specific business purpose. Okay, like SNRR export of goods, and they either separate keep a separate SNRR per business category, right? They either keep a separate SNRR account for each business category, or they keep one SNRR account for multiple business, but must clearly separate an account for each activity within it, right? So what I'm telling you, that bank must show which rupee flow belongs to which business, no mixing up, right? So bank may keep, right, a separate SNRR account per business category, or keep one SNRR account for multiple business, but must clearly separate a separate account for it. Now, what kind of transaction are allowed? The credit and debit in the account must be directly related to the business, right? So they must be commensurate, they must be related. They must be related with the business operation and should match the scale of the business operation, right? They must be related to the business and they should match the scale of the business operation. No odd or no huge deposit that don't make sense. For example, suppose if you import $100,000, suppose you import $100,000 of goods, right? So the rupee payment in the SNRR account should roughly match that business, right? Now friends, let's talk about the key restriction. That means no forex to resident in India, which means SNRR must not be used to give foreign currency to anyone living in India, right? It should not be used it should not be make available foreign exchange to any person resident in India, right? In short, you cannot convert SNRR rupee into foreign currency and hand them to an Indian resident. Then we have important prohibition, that no transfer from NRO to SNRR account. Yes, this is a very, very important thing, which means, that you cannot transfer money from NRO account into SNRR account. These two account types are kept strictly separate. So money already sitting in resident rupee account, which is NRO account, cannot be moved into SNRR account. Let me give you a short practical example to clear all this, to make you understand this concept. So take the case of UK company, right? So this UK company, what it does, it supplies software service. It supplies software service to an Indian firm. Fine. It opened an SNRR account to receive rupee payment from the Indian client. So it supplies software service to Indian firm, right? What it does, it open an SNRR account to receive rupee payment, right? to receive rupee payment from the Indian client. The bank record receipt under SNRR software export. The company has spent rupee in India. So he has spent rupee in India to hire a local vendor. Right. To hire local vendor, they have spent rupee in India. Right. All transactions match the software business and no rupee are converted into foreign currency for Indian resident. Right. So this way you can think of it. UK company, right. Rupee from Indian client. This way you can see. From Indian client, rupee to UK company. Right. And rupee, this is given to the local vendor. Isn't it? So I hope it is clear. Now, basically what we have discussed just now, let me just summarize the key point which we have discussed just now. So I told you that, SNRR account, right, is a rupee account for non-resident with business interest in India. So any non-resident person or entity with bona fide business in India, like investment, import, export, trade credit, ECB, IFSA related business, they can open this SNRR account, right? Then I told you that account location. So account must be with a bank in India outside the IFSC. So account must be with a bank in India outside the IFSC. First point. And tenor I told you for 7 years, right? Concurrent with the contract or business and usually up to 7 years. So tenor is concurrent to the contract tenor or business tenor. Then I told you about, business segregation, business wise segregation, which means account named for a specific business, bank must segregate, identify category wise. And then finally we talked about the transaction. Transaction means debits and credit. They must be incidental and proportionate to the business operation. Right. So that is the point about transaction. So they must commensurate with the business operation. What about the restriction? So you cannot make foreign exchange available to a person resident in India. And prohibition, which means no transfer from NRO account to SNRR account. Now let's talk about the some more points regarding the acquisition and transfer of immovable property in India by a non-resident NRI. So want property in India but live abroad. I will explain in the simplest word what an NRI, what a PIO, what OCI can and cannot acquire. Right. So first of all, what you can acquire, which is purchase or gift. Right. So let's understand it. So NRI, PIO, OCI can buy or be gifted immovable property in India. So you can buy, you can acquire or you can hold immovable property in India. Right. But not agriculture land. Right. You cannot acquire agriculture land, plantation property or farmhouse. These things are excluded. So in short, you can buy flat, you can buy house, you can buy shop or commercial land, but buying farmland or a farmhouse usually is not allowed. Right. What about the inheritance? See, you can inherit immovable property from somewhere in India. Right. So you can inherit any immovable property, right, from someone in India or from an overseas person who has acquired that property lawfully under foreign exchange rule. So you can inherit immovable property from someone in India or from an overseas person who had acquired that property lawfully under foreign exchange rule. So inheritance is therefore usually allowed even for property that non-resident cannot directly buy. So yes, we are talking about inheritance. So remember, inheritance is allowed, right, even for properties. Inheritance is allowed even for properties that basically that non-resident cannot directly buy. Inheritance is allowed for property that non-resident cannot buy. For example, suppose your uncle in India leaves you a house, so you can inherit it. That is normally okay under the rule. So if your uncle in India leaves you a house, you can inherit it. Then what about the joint purchase with a non-resident spouse? See, this is a special case. If your spouse is a resident outside India but is not an NRI, OCI themselves, so they may jointly acquire one immovable property in India with the NRI, OCI clause. So they may acquire one immovable property jointly with the spouse. So what I am telling you, that if your spouse is a resident outside India, right? If your spouse is a person resident outside India, but is not an NRI, not an OCI, they may jointly acquire one immovable property in India with the NRI OCI spouse. But there are conditions like documentary proof of marriage and compliance with the RBI rule. Some RBI guidance require the marriage to have been registered and substituting for a continuous period, right? Substituting for a continuous period. So commonly interpret as 2 years before jointly acquisition, bank will ask for a proof. So let me explain the layman term. So yes, a non-resident spouse can be a joint owner, but expect paperwork. You should expect paperwork, that is marriage proof, ID, right? Non-resident spouse can be a joint owner, okay, but you should expect paperwork and limit usually one jointly one jointly held property. That is the limit, right? Now, how payment must be made? This is a very important rule. See, payment for purchase must be made either by the inward remittance abroad. So, payment could be either by the inward remittance abroad, from the abroad through normal banking channel, or by debit to the buyer non-resident account. By debit to the non-resident account held as per the FEMA. So, payment can be in the two way, by either inward remittance or by debit to the buyer non-resident account in India. So, when I say non-resident account in India, so what it can be, it can be the NRE account, or it can be, FCNRB account. So all of these are, all of these are the non-resident account in India. NRE account, FCNRB account, or NRO account, right? So what I want to tell you that, payment for purchase must be made by either inward remittance or by debit to the buyer non-resident account in India, and not by traveler check. Remember, this is the very important condition. Payment cannot be made by the traveler check or foreign currency, right? Foreign currency note or any other check. So let me give you a quick practical example to make this more clear. For example, suppose you are an NRI, right? Suppose this is you as an NRI, right? Suppose you want to buy a flat. You want to buy a flat. So you can pay from your NRE account. Yes, you can pay from your NRE account, or you can send money from abroad. You can send money from abroad through your bank transfer, right? So you can pay through your NRE account because you are an NRI, you have an NRE account. You can pay for the flat through an NRE account, or you can send money from abroad, but you cannot pay the seller in cash bought as foreign note. So what you cannot do? You cannot pay the seller in cash bought as foreign currency note. If you inherit farmland from a relative in India, suppose from a relative, you have inherited what? You have inherited farmland, right? If you do that, right, which is basically inheritance rule typically allow that, but buying farmland directly is usually not permitted without a special RBI approval, right? So you cannot, see, you can inherit farmland from a relative in India, but you cannot buy farmland directly, right? Please remember this rule. So these are the very important rule. Now friends, let me just summarize what we have discussed in these two slides. So friends, I told you that, that what are allowed to buy gifts. I told you here we're talking about. Yes. So NRI, PIO, OCI may acquire immovable property other than agriculture land, plantation and farmhouse. Yes. You can acquire immovable property, right? Second point. What about inheritance? I told you that inheritance from, from a resident is generally permitted. Inheritance is often a valid route even for otherwise restricted property. So inheritance is obviously a valid route, right? Now, joint acquisition by a spouse. A non-resident spouse may acquire one immovable property jointly with NRI or OCI spouse. Bank asks for marriage proof and follow the RBI condition. Then we talk about the payment consideration. So it must be by inward remittance through banking channel or debit to the NRE and NRE FCNRA account. Traveler check and foreign currency notes are not allowed. Please remember this condition, very important. Now friends, thinking about buying property in India while living abroad, two a special rule that you must know. So what are the two rules? The first is when a non-resident spouse can join you, and second thing, when a long-term visa holder from Afghanistan, Bangladesh, Pakistan, and that is minority, they are allowed. So I will explain both the case simply. First case is when a non-resident spouse can join you. Second case is when a long-term visa holder, right? So let's discuss it. First of all, if the spouse of an NRI or OCI live outside India, but is not an NRI or OCI. See, a spouse is living outside India, but he is not an NRI and OCI. They may jointly acquire one immovable property, not agriculture land, not plantation, not farmhouse. So the rule is that, they can acquire, right? So they can acquire one property they can acquire, right? Now payment must be made from the fund either remitted into India through the banking channel or by debiting a permitted non-resident account. I think we have discussed it. And the marriage must be registered and must have subsisted continuously period of at least 2 years. So marriage must be registered and must have subsisted for at least 2 years immediately before the property is bought. Bank will ask for proof What kind of proof bank will ask for? Like marriage certificate, passport, etc. And the non-resident spouse must not be otherwise prohibited from buying property. So non-resident spouse should not be prohibited from the buying property. So you can think of it like this: your foreign spouse can join you to buy one house, but you must prove that you have been legally married for 2+ years, pay through formal banking channel, and make sure that nationality rule does not block them. Now, let's talk about the acquisition by a long-term visa holder. See, there is a special facility for people from Afghanistan, Bangladesh or Pakistan who belongs to minority faith like Hindu, Sikh, Jain, Buddhist, Parsis, Christian, right? And who hold a long-term visa that is called LTV. You know what is LTV? That LTV stands for long-term visa, right? They can buy limited property but with tight safeguard, right? So they may purchase one small residential unit, right? They may purchase one small residential unit for either self-occupation or one immovable property for self-employment. So two things are there: one residential unit for self-occupation, one immovable property for self-employment. And the property must not be in restricted, protected area or cantonment zone. So the property should not be located around the restricted or protected area or in cantonment area, right? And next thing, the property registration, and they must declare the source of the fund. Yes, source of the fund also has to be declared, right? And the property registration must explicitly state the buyer nationality and that they are on LTV, right? So registration document of the property to mention the nationality and the fact of LTV. And the property may be attached or confiscated if the buyer engages in anti-India activities, right? So it may be attached or confiscated for indulgence in the anti-India activity. Selling that property later, right? If you sell the property later, it is allowed only after the person acquire Indian citizenship or earlier only with the prior permission from the DCP, FRO, FRRO. So you can say that if you are a minority LTV holder, you can get a home to live in and one premises to work, but you must show where the money come from. You must avoid sensitive zone and your ownership is tightly tracked. Right, that is the point. And now let's talk about the payment and paperwork. So bank and registration office expect formal proof. So all the payment must be made through the banking channel. Right. So let me give you some real life story to make this concept more clear. So take the case of joint spouse buy. Take the case of Priya. So Priya is an NRI. Hello, hello. So interest rule on death of the depositor. Let's have a look. So the depositor die, the bank paid the interest in different way. First thing is the paid on maturity. So the bank pay the contracted rate, which means if the FD mature and the payment is made on the maturity date, nothing change. You get the original rate. Paid before maturity. So which means the bank pay interest for the actual period the deposit ran and no penalty is applied. Suppose the depositor die before maturity and the family take money out immediately. They get interest for the time the money was invested and the bank cannot dock interest as penalty. Next point is death before maturity, paid after maturity. So the bank pay the contracted rate up to the original maturity date, right? So basically the bank pay the contracted rate up to the original maturity date. For the time after maturity until payment, it pays the simple interest at a rate that applied on the maturity date. For example, deposit contracted rate apply up to maturity. If payout happens 30 days after maturity, those 30 days earn simple interest at the maturity receipt date. That is the point. So bank pay the original contracted rate at the original contracted rate till maturity. Okay, till maturity original contracted rate, right? And for the time after maturity until payment, it pays the simple interest at the rate on the date of maturity. Right, these two cases. Now what happened on date after maturity? See, from the maturity date till the until the arrival actual payment date, interest is paid at the rate that was operating on maturity. Right. So interest is paid on the rate that was operating on maturity. Maturity date for saving under the RFC scheme. So that is death after maturity. For example, suppose the depositor die after the FD has already matured and the money was still with the bank. The bank pay interest from the maturity to the payment at the RFC saving bank rate that apply on the maturity date. So let me give you one example to make you understand all these cases. Right? Clear? Suppose you have an FD right? You have an FD that contracted at 6% for 1 year, right? Now, if the depositor dies 7 months in and the family withdraw immediately, suppose depositor died and after dying, within 7 months he died, opening the account and family withdraw immediately. So in that case, the family will get interest for exactly 7 months. Okay. Now, and then they won't be penalized. They would not be penalized. And if a depositor dies 7 months in, but payment have happened after the FD maturity date, the bank pays 6% up to the maturity. So in this case, suppose you have an FD, right, that contracted at 6% for 1 year. The depositor die 7 months in, and the family withdraw immediately. The family get interest for the exactly 7 months, and they won't be penalized. If the depositor dies 7 months in, but the payment happen after the FD maturity date. Suppose depositor dies 7 months, but payment happen after maturity date. So in that case, the bank pays 6% up to the maturity and the simple interest at the maturity date rate for the day after maturity until repayment. So what we have just discussed in these two slides, let me just summarize. I told you about fixed versus floating rate, right? So what are the points I told you? You remember? So fixed means rate unchanged, floating means linked to a benchmark and changes, right? That is fixed and floating. Then we talk about the reset period, which is every 6 months. Reference rate, you have to use overnight alternative reference rate or FBIL swap rate. Markup ceiling, less than 3 year. Reference rate is what you know. Use overnight alternative reference rate or FBIL swap rate. Markup ceiling, I told you. If it is less than 3 year, then up to 250 BPS. Right. If it is 3 to 5 year, then it is 350 BPS. Right. So reference rate plus 250 BPS. So that is how markup ceiling is decided. Now calculation basis 360 days per year. Renewal rule says that it should be renewed within 14 days and overdue period get lower of the maturity date rate or the renewal date rate. And death case, pay contracted rate if on maturity. If paid before maturity, pay interest for the actual period with no penalty. If did before maturity but paid after maturity, contracted rate till maturity plus simple interest after maturity and death after maturity pays at a RFC saving bank account rate. Now friends, let's look at the next slide. Let's understand the key points in the next slide that we have. I think this is the repetition part. Let's skip it. Yes, let's talk about it. So friends, basically we have resident claimant, right? What happened on maturity? Suppose an NRE FCNR deposit mature and the claimant are the resident in India. The deposit on maturity is converted into Indian rupees and after that interest is paid at the rate applied to the comparable domestic term deposit. In short, resident hires see their money, right? See the money in rupee and get domestic TD rate going forward. So let me make you understand this entire paragraph using one example, simple example I will take to make it more understandable. So friends, let's suppose that think of it like when the foreign currency FD, so there is a foreign currency FD, it finishes. So what happened? And the person getting it lives in India. So the bank pay out in rupee and then treat the remaining money like a normal Indian FD. That is what I mean when I say this and this kind of thing, resident claimant. Which means if an RE deposit mature and the claimant are resident in India, the deposit on maturity is converted into Indian rupees and after that interest is paid at the rate that applied to the comparable domestic term deposit rate. So that is called resident claimant. Next we have returning NRI. Can the FCNR deposit keep earning the same rate? So what do you think? Can the FCNR keep earning the same rate? So if an NRI come back to India existing FCNRB deposit can continue to earn the contracted rate until maturity. So if it is existing, if it is existing FCNRB deposit, it can continue to earn the same interest until maturity. But there are conditions, provided the deposit is then treated as a resident deposit from the date of the return. So you have to treat the deposit as a resident deposit from the date of the return to India. Second thing is that on maturity, the account holder must convert the matured amount into either a resident rupee account or RFC account if eligible. So it can continue till maturity at the contracted rate on condition that they has to be treated as resident deposit from the date of return to India, and on maturity it can be converted to resident rupee deposit account or RFC account. So the new deposit will then earn whatever rate applied to that new type of account. So you don't suddenly lose the FCNR rate just because you return. The bank will treat the deposit as resident but can let it run at the original contracted rate until it matures. Afterward, you can choose RFC or rupee account, whatever you choose. Now, what about the interest after conversion to RFC resident rupee account? So if a deposit is converted to RFC or resident rupee account on return, the interest for the period it has been already been run, it has may be treated as the saving rate until the RFC scheme, even if that period is less than the usual minimum. So if you convert mid-term, the bank may compute interest for the term already passed using the RFC saving account rather than the original FD formula. What about the premature withdrawal? So bank must allow premature withdrawal of FCNR deposit on depositor request, and they may charge the penalty as per their board approved policy. In addition, bank may levy a charge to recover any swap cost that incur, because FCNR is a foreign currency and bank has that exposure. So yes, breaking the FD early can be costly depending on bank policy. So this thing is a repetition. So let me skip this part. Right. So we have repeated. Now let's look at the issue of the international credit card. Right. So we have already discussed the FCNR account in detail. This one is just repetition, nothing else. Sorry friends.